So your portfolio is going to melt down a lot faster if you're in all this Palantirs and high flyers and Teslas and things like that. So for me, macro picture is cloudy. Technical picture is definitely critical at the moment. We are sitting on some really important levels. I personally think, I don't think it's going to hold. I think we'll have more downside to come. And if the market, again, this is a big if the market's going to price in a slowdown or a recession, and we get few more bad economic indicators coming up, we're looking at serious drawdown here. Okay, because we are extremely overpriced. Why? And then I'm going to go to my charts and actually answer some questions and go to my charts. Here's the deal. The S&P 500 last year, the 500 companies, there's an earnings and there's a PE ratio for that. It earned about $220 combined, all S&P 500 companies. So you put a PE of, let's say 23 on it. So 220 times 23 PE is a 6,000. That's where we are. This year, it's expected to grow about 15-17%. The earnings are. Low estimates are 260, high estimates are 280. Okay, so you put a 23 PE on that, which is extremely high for the S&P 500. Very high. The average is about 17, 18. Actually lower, 16 to 18. So you put a 23 PE on $260 earnings. That's where you're going to looking at 6,500, 6,600, which will put the S&P 500 up 10% for the year, because people are dreaming when they're calling the third year of 20+% moves. It's not going to happen. My prediction was up maybe 4%, 5% for the year. The videos are on the channel. You can go check it out. So if these earnings estimates are incorrect on the S&P 500, first of all, your stock is not going to go up if the S&P is going down 25%. It's just not going to happen. Can you find stocks like that? Of course you can. Are there, needles in the haystack? Of course there are. How do you do that? Well, even when the market's going down, there are stocks that are going up, right? 52-week highs. You just constantly check your 52-week high list. I mean, there are scanners for that all over the place. But so if the earnings are not going to get to 260 or high end 280, what happens? If there's an earning, if the economy is slowing down and that 260 is too high, they cut it to 240. Well, when they cut that, they're also going to cut the PE. Because 23 is high. So both combinations are not going to be good. So what I'm saying is I truly can see the S&P 500 going down to 5,000, which is about, 20%. But when the market goes down 20%, what's going to happen to your portfolio? And how do you combat that? Well, you buy puts. I mean, I'm kicking myself in the ass that I did not buy puts this time around. And I was looking at the chat last night, reading through it. Twice I said it during the, members Telegram group. One time was, I think I'm going to buy some puts, and S&P was like 608, and I didn't. Then we tanked, and then we bounced. And if I said it before the open, I said if the market opens here, I'm going to buy index puts. I didn't. That was the second time. Well, those puts quadrupled.